Good morning from Trend Signal. Welcome to our workshop for the week beginning the 18th of November. A mixed week for sterling markets. The FTSE was unchanged on the week. Quite different story to what happened in the US with the S&P and the Dow up 1.6 and 1.2% respectively. The dollar gave back quite a bit of ground following its 6-week high the previous week. The euro rallied, cable rallied, sterling rallied a lot actually. The yen punched above this 100 level. Gold didn't really do too much when you consider what the dollar's done. Gold sort of still stuck in quite a narrow range. So positive data last week. CPI came in weaker, which paradoxically, although it's negative for sterling, it's actually quite positive for the equity markets, which has actually helped sterling in the long run. Mark Carney for the Bank of England adjusted the bank's forecast on the employment rate and as a consequence effectively shortened by 18 months when interest rates would rise. So that had a very negative effect on our equity markets in the UK. But he did say that that did not mean rates would rise. Yeah, all in all, here we are at the beginning of this week with overnight news from China. Look to have bolstered the Chinese markets, but in fact there's quite a negative feeling about what data is to come in the US this week. The Chinese markets were up on the back of Xi Jinping's blueprint for economic reforms, notably easing the China's one-child policy and giving a larger role to market forces. However, the Nikkei hasn't really followed suit at all because of a pullback in the dollar or a rally in the yen back below 100 versus the dollar, which has sort of muted the markets to a certain extent overnight. So we got a fairly weakish opening here in the European markets. So without further ado, let's have a look at what data is out this week. A lot of sentiment surveys, etc. A lightish calendar, certainly for today, Monday the 18th. Really the first major release of the week is our first survey, German survey, which is the ZEW economic sentiment indicator. Leading indicators which don't really sum up what's actually happening now. GDP in the Eurozone just in positive territory, as we found out last week. So things not looking particularly good, but this particular survey will be fairly positive. 54.6 is the expectation tomorrow morning at 10 o'clock. We then have the next event is Fed Chairman Ben Bernanke in one of his last speeches before Chairman-designate Janet Yellen takes over. Markets will follow that or listen to that particular speech because if there is any mention of any QE tapering, markets are particularly sensitive to that. Also on Wednesday we have the Bank of England's minutes from the last meeting and the voting structure there. Obviously since then we've had fairly benign inflation, so I suspect this obviously is very historical. It's just the minutes from the previous meeting, so I don't think it'll have a great effect on the markets. We assume that it was a 9-0 vote on the decisions taken. We then have inflation in the United States, again fairly benign, along with PPI as well, which comes out later in the week, all looking fairly benign. Retail sales really struggling still in the US, but we're entering the holiday sort of part of November now. So we expect November sales to be better. But this is core retail sales in October up plus 0.2%, and the CPI up plus 0.1%. Existing home sales still struggling from the moves in mortgage rates 2 or 3 months ago, following the idea that QE would be tapered. That never happened, but this is still the lagged effect of those higher rates in terms of existing home sales. We then have the minutes for the FMC meeting early on in the month. Give us a bit of clarity on exactly what was being discussed there, but we have a fairly good idea because Janet Yellen has spoken at length recently, and I think she's really underlined her dovish credentials, and I suspect that we won't be having any tapering in QE really until the new year, which I guess there's not long to go anyway, really. And then Thursday, we have the start of all these manufacturing PMIs, a lot of leading indicators here. The first one from HSBC on the Chinese economy, very closely watched, an unchanged figure, but anything above 50 is still positive, so that'll underline the improvement in the Chinese economy. We then have a statement from the Bank of Japan and their interest rate decision. We're not expecting anything there. Then we have all the data from the Eurozone on manufacturing PMI. The German and the French ones are the sort of key ones. German one especially is expected to come in at 52.3, which is very positive, along with the French one at 49.6, but that is still below 50, which is still in contracting mode. But overall, the Eurozone manufacturing PMI is expected to come in at 51.6. Which then leads us on to the US data. As I said, we've got the CPI and PPI. This is the price of goods and services going in. No inflationary pressures there at all, expected minus 0.1%. Weekly unemployment claims. And then we have the Fed, Philly Fed Manufacturing Index. So this is for one of the largest industrial states, the Philadelphia Fed District. So that's closely watched, looking for a slightly weaker number from the previous month. So which sort of underlines the sort of patchy improvement in the US. And then on Friday we have the final survey from Germany, the German Ifo Business Climate, very widely taken survey. So again, another leading indicator, 107.9. Again, that'll affect all the euro markets, Euro Stocks, Bund, DAX, and obviously any euro crosses on the currencies. And then, well, just actually no, sorry, there. That's Canadian data for those of you who trade the CAD. Obviously, we've got CPI and retail sales out in the Canadian markets. That's it for the week. An interesting week. Looks like the dollar continues to lose a little bit of ground, but we may have a change in direction if Ben Bernanke does utter something about QE, obviously. But that's it. Thanks very much for listening. We reconvene again on Thursday at 8 o'clock. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.